Hi everyone! Wall Street ended a volatile week with an impressive rally on Friday. All three stock benchmark indices jumped by more than 2%. The US stock futures keep growing today. Asian stock markets are also rising. For instance, stock exchanges in Australia and Japan kicked off the week with gains. Watch our video review and find out the latest market news. Let's start. Analysts are trying to determine the range where the Fed could slow down aggressive tightening. Wells Fargo suggested that the Fed's monetary policy coincides with the movements of the VIX. Over the past 20 years, whenever the volatility index has risen above 40, the Fed has begun to cut rates. Usually, stock markets revive and shares get more attractive than bonds or currencies when interest rates are low, although there are some hints about rate cuts. However, even if these assumptions are correct, the Fed is unlikely to change its stance in the near term. Besides, the VIX is now at 30%. On top of that, the central bank does not factor in stocks when making monetary policy decisions. San Francisco Fed President Mary Daly said that it's time to start talking about slowing the pace of the hikes in borrowing costs. Earlier this month, Fed Governor Christopher Waller pointed out that the Fed could have a very thoughtful discussion about the pace of tightening at the November meeting. A slowdown in the pace of monetary tightening is also necessary for assessing the results of a hawkish stance. This step may help avoid unnecessary risks to the economy. Given the dovish remarks of Fed policymakers and an article in the Wall Street Journal on the same topic, stocks resumed a rally last Friday. All three main stock indices moved up by more than 2%. A similar situation occurred in the equity market in July and August. Back then, Jerome Powell had to make tough statements to dispel rumors about rate cuts. Will Powell step in again this week? Time will show. The Fed's top priority now is to tame inflation. However, inflation turned out to be more persistent than previously expected. It is still very far from the acceptable 2% target level. Apart from the risks of changes in the key rates, analysts in the Wall Street Journal also discussed the constantly growing US government bond yields. US Treasuries and the US dollar are viewed by many investors as the best safe haven assets in times of market turbulence. Currently, the risk of sentiment prevails due to geopolitical tensions and the risks of global recession. Today, the US dollar is trying to recoup some of Friday's losses caused by buoyant rally on Wall Street. It is trading at 112.34. However, the US dollar index has been declining for the last few days versus its main rivals because of an increase in the pound sterling and the yen. Now it's fluctuating in the range of 111.47, 112.44. The British currency is climbing amid the political situation in the country. The reasons for the depreciation of the yen against the US dollar remain unclear. Analysts believe that the Bank of Japan has again intervened in the foreign exchange market without making any announcements. Although it has become clear that currency intervention has a short-lived effect, the Bank of Japan seems to have resorted to this measure once again. Market participants recorded large-scale sales on the US dollar. Such movements on forex usually occur when large financial institutions reallocate their funds or the central bank undertakes an intervention. The intervention was carried out primarily against those speculators who were trying to take topside bets on the dollar-yen pair. Some analysts assume that Japan has already spent $30 billion to bolster the national currency. It may also be a sign that the Bank of Japan will continue to maintain its ultra-loose monetary policy. The yen rose sharply to 144.80 shortly after it started dropping again. Today, the dollar-yen pair is trading at 149.35. After a roller coaster movement from a 2-week low to the previous high of 150, it's now fluctuating in the wide range of 145, 46, 149, 71. There could be new bearish reversals as the Bank of Japan may again intervene without making any statements. Meanwhile, the trajectory of the Australian dollar is sensitive to other factors. It is losing steam against the US dollar due to the divergence in monetary policies between the Fed and the RBA. The latter became first major central bank to hike the rates less aggressively by only 25 basis points in October. What's more, the regulator has made it clear that further monetary policy decisions will depend on incoming data. Fresh macro stats have been quite positive. For example, the unemployment rate remained unchanged, which indicates a fairly stable labor market. The Australian-American dollar pair is declining today from the previous closing price. In the Asian session, it sank to 0.6288, moving in the price corridor of 0.6285, 0.6414. The Bank of Japan's meeting is due at the end of this week. A batch of crucial economic reports is also on tap. Alphabet and Microsoft are going to unveil their earnings reports. Subscribe to our channel and keep your finger on the pulse. See you.